you for joining
It's
us.
great to be here today.
We're going to talk about education and why success in a moment. But first, big markets day for us, big IPO day. The folks were just talking about ARM. Do you look at ARM, which is the biggest debut in a couple of years, as a sentiment barometer? How do you look at IPOs and what they signal about where we are in the market?
I mean, so clearly the ARM transaction is a sentiment barometer. The very fact the deal's coming to market today tells you there's a perception that our capital markets are reopening for IPOs. And I really hope this is a deal that goes off very well today. We need to see all of the VC-backed companies of the last decade have that opportunity to go to our public markets to raise capital so that the founders have an opportunity to continue to grow their businesses and grow our economy.
It's been a surprisingly good year for the markets and the economy, which I think is reflected in the fact that they're going public. Question, Ken, is what comes next?
So actually, I would agree with you. It's been a really good year for the market, particularly with the backdrop of higher real interest rates. So if you look at both the yield on the 10-year bond and more importantly, the real yield, for example, in the 5-year TIPS bonds, we've seen, again, an increase in real rates and nominal rates, and yet the stock market's been resilient. So that's a really interesting year to see the resiliency of our stock market against this backdrop that would usually be very challenging for equities.
Think it can continue?
I'm a bit anxious that this rally can continue. You know, obviously, one of the big drivers of the rally has been the just frenzy over generative AI, which has powered many of the big tech stocks. I like to believe that this rally has legs. I'm a bit anxious. We're sort of in the 7th or 8th inning of this rally.
Well, part of it has been the soft landing story. Are you a buyer of that? The fact that we just haven't gone into recession despite 525 basis points of tightening.
So it takes about a year to 2 years for an interest rate hike to work its way through the economy. It's not instantaneous. We're now at the point where we're going to see the impact of these hikes really start to play out. We're seeing the job market starting to weaken. There's been a number of news stories in recent weeks about how companies are willing to pull back what they're paying for starting roles. We're seeing signs that consumers have had enough in terms of price increases, that they're starting to walk away from products they're trying to push through price increases. So there's signs here that we're heading very quickly into hopefully the soft landing, potentially a more difficult scenario moving into mid to late last year in terms of an actual.
So I'm going to continue to hold my equities right now. My portfolio's gone down probably 25% or something in the last month or so or something like that. It was because there was a huge drop in the price of Momo. It went down from like 10 something to like 7.30, $7.30. So it was a huge decrease as a percentage of my portfolio. But as I've shown in previous videos, it's the exact same thing. I'm going to continue to hold my equities. I'm going to continue to hold like my Chinese stocks. I mean, yeah, it's high risk, obviously. So this is not investing advice. I'm not giving investing advice. I'm just talking about my own situation. But I think that, as Charlie Munger says, that's where the best value is. And, you know, right now, I think Momo, in its last quarter, it trades at like 6 times earnings or something. I think after taxes, it made like $64 million that from operations, including taxes. So after taxes, I believe it's something like that. So if it got that for a whole year, after tax, it trades at 6 times earnings. So that's a real 16% return immediately. Plus, at this current price, it yields like 9.4%, I think, or something like that. So there's a 9.4% yield, and it trades at 6 times earnings. So I just hope I hope they do share buybacks, which unfortunately I don't think they're gonna do. I think they stopped that. It's kind of sad. But we'll see what happens. I hope they just return more cash to shareholders and manage their business and try to expand it and do whatever. So I'm going to continue to hold my portfolio the way I have been doing. I'm going to continue to hold Joy. You know, they bought back 10% around of the stock last quarter. So in one quarter, they bought back 10% of their shares. They have billions in cash. Duo-U isn't a very good company. I mean, I think they cut their loss by 70%. Finvolution's still growing, I think, at 15%. Mostly that's all international, basically. Um, Keyview Technology, it's the same thing. So, I'll see what happens. And I'm just going to continue to hold my equities because I think that's where the best value is, and we'll just see.